Hey, today is 7th of October, new month. Let's see how BTC is doing to start with. We'll look at 6 hours. So this is achieved, and now we can put one more thumbs up indicating the progress, indicating the progress because it's able to stay above this particular orange zone. And as I indicated, this is immediate required level. That's where it is. So we can say the immediate required level has been achieved. However, it has to close above it. If you look at it, it's trying to break above the same level which was the point of rejection. So this was the first try after this rejection, and this is, you can say, a couple of trials here on intraday time frame. So there are multiple trials, and there are also multiple trials where it wanted to break below or re-enter into this orange zone. So what we see here is this is a good defense, especially this one was a quick move on the downside and then rebound. So this looks like this critical support one becomes the critical support again, just in case if it starts going down. So 26900 becomes very important because we don't want price to re-enter, especially in this zone, right? So we wanted price to be about 26K, which we got. Now we don't want it to return back to this orange zone, especially below this 26,900. If that happens, we can consider that as weakness. So far, there is no sign, but it is important to note what level to be monitored. So I would highlight that if it breaks below 26900, then consider that as weakness, and if it breaks below 26K, then consider as risk. See, always, unless until it reaches to its required destination, the focus should be what it should not break below. That's how I track. Once it breaks above required level, which is this level, we're not concerned about the critical support, because the critical support would be much more at the lower side. However, when it is below the required level, it is important that which level must not be broken. So people focus on the resistance, and I don't focus on resistance when the price is below the required level. So that's the difference between some of the people who just focusing on the targets. I don't focus on the target. I want to make sure the kind of progress it's making, it continue to make progress until it reaches to the required level. So this way, we are not trying to look for the target or some kind of achievement, or in other words, from trading point of view, I would not like to, if I'm a trader, I would not like to book my trade for profit or any kind of risk until it breaks below my critical level. So when it was here, this was the level to be washed out, or let's say if this would have gone down, then I would have exited. If and then this becomes the point of reference, and now this becomes the point of reference, this critical level. So if as you could see that it's making progress by watching this lows. Remember, the current value is the current market value, we know that, but you had to make the, I mean, I would monitor the lows. That's how it is. So next, let's say it continues to move up and then goes up. It's going to go down again, right? Like, because it doesn't move vertically, it always moves in a zigzag manner, like up and down, up and down. But if we had to make a if you have to track a real progress, then we have to track the lows like this. That's the whole idea. Okay. Don't the current level is of course important, but these lows are super important. Okay. Highs are not so important. Highs are important only when there is a that we have to find lows, sorry, tops. Here it is near the critical support, so we have to make sure it doesn't try to make new low. When it is totally on uptrend, like fully on uptrend, and then we have to monitor the tops for the top potential top, and that's where we focus on the highs, which we'll do when the time comes. Right now the focus is lows. Of course, we always monitor high, close, and lows, but the most important one is the lows, and then close, and then high in this phase. So that's how it is. Now, so this is good on intraday. We can see that it's holding up nicely, but we know that this is another resistance zone, and it has to break above. So if it breaks above, it is going to face some resistance somewhere here near 29K range, right? And once this is also broken, and then we'll come to the ultimate level, which is 31,000 to 31,500 range, where we can extend this resistance zone all the way up to here now, because that was the point of rejection earlier, this cluster that you see, right? So we have, so this was the cluster, this is the cluster, this is going to be another cluster. Like this. That is too much. Okay, so likewise, this is another going to be the cluster, and then ultimately this. So point is, we would like to see BTC making progress in this manner. We had this kind of illustration, if you remember, like this, right? And then of course some kind of retracement, and this is where we would expect it to decide something critical, right? And this retracement could be deeper, could be this much. We don't care, because what we'll be focusing on the progress in terms of lows, right? So in worst case, if it reaches here and low is like this, then that's a point of concern, which we'll see when it comes. We don't have to worry. At this moment, we are expecting this kind of progress. Nothing wrong about it. So we have this roadmap, a bullish path, optimistic path. The pessimistic path, as I mentioned, is in case if breaks below this support, then that would be considered as weakness. And especially if this 26K is broken, that will trigger downside risk. In that case, we have to think about potential downturn, because in that case, the probability of holding this would be extremely low. So that's not a probable scenario at this moment. The probable scenario is what we see here in this path. So we don't have to think about the lower side unless these levels are broken. So as you could see, we don't have, we have this, or we can say this, we have probabilistic path, not deterministic, but probabilistic path based on what level it breached or breaks. Okay, so that's how it is, and that's so simple to understand, I believe. Let's look at higher time frame. Higher time frame is not, one day is not going to give us anything. What we can see is the trend line on this one is broken. You see, I know there's a little crowdy, but So considering this, and we can say that it retested this breakout level. Usually I make it with a CC. I'll try to make it bolder like this. So rejection and then some struggle, but then this candle were able to break above. So this is very good news. And now we could see that there was some retracement, retesting this breakout level, which is good, and now heading up. That's a good sign. So this the price recovery. This was the first attempt, and then this was the second attempt, and I think this is a continuous attempt. This is not a failure. This retracement is not a failure. So this second attempt worked out in terms of this downtrend line with the orange color, right? So this is good. So at least the downtrend line is now recovered. We'll look at something more. So this is 1 day. Let me see if I see anything that is to be addressed. We can also see this particular zone. Yeah, with this one. Yeah, nothing more. So yeah, the next one is this. So on 6 hour, what we saw, the 1 day is the same. Only thing is we can describe further with this downtrend line. Let's look at weekly using this coin-based setup. Okay. So this was the pattern that we wanted to see, and look at this one. So it is making progress at this moment. This is like a doji candle, right? Not an impressive candle, I would say. A doji one, doji means the body is so thin, which indicates indecision. Means I don't know what I'm going to do next, kind of a thing on a weekly. So when you see this kind of a doji candle, that means it's neutral. It's not bearish. It's not bullish. It's neutral in my point of view, because especially when it is in near the center, especially uh, if the doji is on the upper side, that indicates some bullishness, though still indecisiveness, but better than a doji or the body, thin body near the bottom, right? So for an example, this is not good. This is better because it is on the upper side. This is based on candle analysis. If it is near middle, that means it's pretty neutral. Like this is lower and this is middle. So there was little movement on the downside like that. Again, this candle-based shape analysis is statistically, I would say, not extremely reliable. It is just for clue. But there are so many techniques we can use, like using trend line, using patterns, using measurements, which I provide, using support and resistance, or using candle shapes. So candle shapes, sometimes I refer and that what I explain, but it's not highly reliable pattern. Okay, it's just for tentative clue. So if the body is strong, and then we can say it has strength, especially like this kind of a candle. So that gives us confidence. Okay, now so this is doji one, means indecisive, neutral one. So that's not negative. It is maintaining the status, which is good. Okay, and what else? What if we draw the line that it had broken earlier, which was this one? So can we get something? So what you could see is this is taken care. I can remove it, which we saw in 1 day. So let's say this is the line. Let me change the color, maybe green one. So this was the line which was providing support, and it was broken. Maybe I'll like this. So it provided support, but in broken, and then there was an attempt. You see that it tried to recover by hitting this one, but it failed, right? It failed, but not it the it didn't go down so deep. It maintained this support. So this was the failed attempt, you can say, and now this is another attempt. So if you extend it, it depends on this angle. So if this angle is this, right, then what we see here is this week is ending. So probably the next week, if I project, so that's where we are going to face some, if it reaches here next week, then 30K is where again this trend line is going to play its role like it did here as a resistance. Similarly, if it goes up, let's say next week like this and touches 30K, then 30K is the one. If it touches next, if it doesn't touches, and let's say next week it reaches to 29K, and then next to next week it touches, then around this level. So it depends when, in terms of week, next week, next to next week, or a week after that. So this line will play the role. In other words, we can say that from trend line point of view, if whenever this line is broken above, if the trajectory is this somewhere here, then probably if this is the angle at which it progresses, so we can say by month of October, by end of October month, we can expect, right? We can expect it to be near 32K. Remember, if this could change, or we can say near 32K, okay, near 32K or 31K to 32K range, when by month end, with this logic. Now, if you extend it a little further, since this was the point of rejection, we could see that there could be some kind of retracement and then another leg up like this. This is a bullish scenario where we expect it to continue. So this retracement could be up to 30K, whatever, little, and then goes up. And we could add one more line like this, and then say, okay, there could be one more reaction near that level, which would be whatever, 33K plus. So I think for now, this much of projection is good enough. So on a weekly basis, what I see here is definitely it will, let's say, continue to move up in a zigzag manner like this. See, one move could be like this, and then retracement like this, and then this. So it's not important. Important is the angle of this wave. Look at so this was also zigzag, but then this was the angle, right? Here it was slower and then faster, but this is the angle. So here this is slower, let's say, and then it could be faster, whatever. So here, and this could be a quick move and then a little slower. So that's not important. Important is what angle it moves, an average slope of this wave. And this is a potential projected slope that we are expecting, right? Whatever angle is this. So that's how it is. And then, of course, because this is a major resistance, major one. So we are supposed to, I mean, we are expecting some resistance like this. So some retracement, and then, and probably in month of November, it tries to move up. So if you can always extrapolate further that maybe by December end it could be near this zone. However, if it gets rejected here and comes down, right, and then it is and tries to spend some time, then it is possible that even by year end, it could be somewhere here. So from the projection, it looks like by end of the year, it could be near 33K or near 37K. Yeah, that range, basically below 40K. That's what it looks like, unless it goes like mad like this and pumps heavily like big huge candle, then it could change the thing. But if we go by this projection, then we can say by December it could be somewhere in this 33 to 40K range. And this is based on assumptions. This is based on assumption that what angle it takes. Remember, assumption changes if the angle changes. So if it corrects and go down further, then it delays, then it might stuck until year end in this range, 30K, 33K range. It is possible, right? It all depends on what happens next, because remember, the Fed's decision is going to be in November and also in December, because if they hike the rate and market doesn't like, then there can be negative effect as well. So though we can project for higher level for month or 2 month or 3 month, or sometime some people do for 1 year, I don't believe in it, because there are so many events in the macro events that could change the trajectory or the acceleration or this or slope of the wave, that it is going to be inaccurate. So instead of why to make ourselves just happy about, okay, 50K, 100K, whatever, I think we can do it projection wise, but it is just a dream. Okay, it's just aspiration, it's just assumption with very less accuracy. And my objective is to give more accuracy. So I'm not trying to say just for 1 week or 2 week we could think, but I think going for a year or 6 months, to me it's too much, because nobody knows that what is going to happen after 6 months. Even 3 months is blurry picture, to be honest, and especially in the environment. Even if someone can actually predict for 1 month consistently, not just once or twice, but consistently, that's also a big achievement. Because every month this inflation data comes up, FOMC meeting happens, decision comes up, and things change. That's why you see that this kind of a down move has changed everything. This was perfectly all right, up, consolidation, up, consolidation, some correction, up. But what happened since June? So for you can say for 4 months, we could not get new high, simply because it was under correction. So we can say it is consolidating since April. So for last 6 months, it is under consolidation only, right? For last 6 months, because this was the high and this high was not high, new high, almost the same. So this was the real high, you can say. And then after that, it has been consolidating. So this was the consolidation, last consolidation, and this is the recent big one. This was a minor one. This is really big one for 6 months. So that's what happens. One big move on the downside changes the slope, changes the target in terms of calendar. That's why as you go further, you get less and less clarity in terms of target with respect to calendar. So that's why I think thinking about few weeks makes sense. Otherwise, it's just aspiration or imagination, which is likely to be wrong if you go beyond that. Okay, so that's my rationale behind why not to go too much in the future. Though we can, but it doesn't make sense. So I think this is good enough, right? And in this one, in a big picture on a weekly, yeah, this range we don't want to see 26K, which we already covered in 1 day or 6 hour time frame. We don't want price to be here, because if it is here, then consider that as a risk, because then this is like an attempt, like This is like a breakdown of this trend line. This is recovery attempt, and then recovery attempt would be considered as failure if it starts going down. Because if it comes down to this level again, 20, 25, 26K range, then the probability of breakdown would be highest. In that case, we can say this particular attempt died at 31,000 range and then comes down to this one, and we'll see if that happens. Right now, we don't have to think too much about downside because the price is not at 25K, 26K level. So if that happens, so in what case it might happen? I think only one case. If the Fed um, doesn't stop and keep raising rates, then it could happen with high probability, I would say. Then it could break down. So I think it all depends on Fed's policy, and that means it all depends on what inflation data and other relevant data we get, because whatever data, especially inflation data and labor data, it's because recently you saw the labor data was so strong in the US. That means economy is so strong, and when the economy is strong, the demand goes up. When the demand goes up, inflation goes up, and that's why we saw the reaction on Thursday, on earlier in Friday. It went up. Market is crazy. But as soon as the report came out on the Friday, yesterday, market tanked. It dipped, and the bond yields went up, and the XY also went up. You saw that for a few hours. Then it went down. Right. So that's how it is. So if you see that the crypto is not immune to this macro factors. Macro factors are the drivers. Okay, that's why we look into DXY. That's why we look into 10-year bond. So after this, we are going to look at that, right? And those data, reference data, are important for understanding point of view, because if they improve DXY and bond yields, they improve. That means then it's not a good news for Bitcoin. And if it is not good news for Bitcoin, then definitely it's not good news for any other coin. Okay. So I think that this is enough on this setup. Let's look at our another setup, which is making progress. Just extend it. Nothing changed. We're just extending. Okay, so I don't have to explain this because we covered a lot. This is the projection, right? This is important. It is in the green zone, of course, so, and making progress. So that's good. So I think this is good enough for BTC. Let's look at DXY now. Beautiful, isn't it? Like, this is the last resistance which I mentioned. Very good to see it didn't go up beyond this. See, try to break above, but not quite able to. So it is good to see first weekly red candle after 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This was 12th was green, but it turned out to be red before the week ended, which is good. This is a doji one, but on the lower side. So doji is kind of neutral, but on the lower side is a good news from a candle analysis point of view. But anyway, first of all, forget about the doji. It is good to see first red candle after so many back-to-back green candles, because this was like on rampage, like unstoppable. But this worked out pretty well. We had a resistance in between, but this was the last major one. This was the key resistance earlier, but this was the last major one. So it's good to see reaction on a major one. Because if this would have gone up like this, then really Bitcoin would have struggled based on the historical data. So now what we have to see is, come next week, this continues to go down, right? And go down further below 105, below 105, and ideally 104, right? And if it could come down to this zone, then it's awesome. So basically, we would like to see this path ultimately, and not in a direct downward, but like zigzag, like this. This is what we would like to see uh, until next year. Continue to go down like this. Then this will be the bull run for BTC. Okay. And of course, if it goes up and continues to go up, then the probability of BTC to break down becomes very, very high. Very simple to understand. Let's look at bond yields. Bond yields touched my upper resistance. This is my alert actually. Okay. Yeah, and that's resistance we can say. We'll copy this one. Yeah, this is the line. So this was a breakout level. It did, and it touched this one. So now this is another one. I think I should not extend this further like this. This is too much. What did I do? Something is so so this arrow is worked out well. Now can it retrace from here? Again, if this goes up, this will boost DXY as well, because that's what I observed and that's what experts are telling. I'm not an expert on macroeconomy. Remember the fundamental. I have some information, I have some understanding. My focus is charting, technical analysis, but whatever I understand, I try to pass on. So if the US Treasury 10-year goes up, it tends to push the DXY up as well. So we can see the chain reaction. So that's why 10-year is important for us to track, because it impacts DXY and DXY impacts BTC and so on. That's why this has to be tracked. So it has reacted, but it's still very strong, as you could see. So come next week, we have to see that if it goes down from here, if it goes down from here, and it's a I would say a positive move for BTC, or good news for BTC. If it continues to go up, some of the economists are saying that it could reach 6%, or as Jamie Dimon said, we have to be prepared for even 7%. See, I know that this treasury is looking really, really strong if you look at quarterly, and I'll show you. Because you see what kind of drawing I have here. So this line was the breakout line. It is broken. We are talking about weekly setup, but when you look at the big one, this was like 1980. So this is like 40 years of downtrend, and then it has broken this downtrend after 40 years. So if this continues, in the worst case, probably that's what my green arrow was there earlier. If this has to continue, it could really go up in a big manner and go. I'm not saying 14%, but 6%, 7%, whatever, is not a big deal actually. In fact, my calculation says if it breaks about 6%, then it's a big trouble, technically speaking. I'm talking about very long term. Remember, this is quarterly chart. Each candle is 1 quarter, means 3 months. So this is whole entire 40 years. So basically, when the yields go down, the bond market goes up, means the bonds were in demand. It means but now the bonds are crashing. Yields are going up. Okay, so that's what is happening. So when you look at big picture, one can imagine what if like someone like Peter Schiff, they're expecting a double digit. I don't say yes or no. I simply say if this level is broken, the next level is that. If this level is broken, the next level will be that. Something like that. So I think in terms of increments, I don't think in terms of ultimate targets. Because the reason I explained, there's so many things in between can happen. That's why. Nobody knew that there would be COVID, like, and that there's some kind of a drop like this, and so on. Right. So things are not predictable. What if there is war in China with China or someone else or something like that? What if something good happens and war stops? You know, everything could change, that kind of scenario. So we don't know what is going to happen down the line. But when we think incrementally, step by step, it is more accurate and that helps, right? But one thing is for sure, there is no weakness in this chart. On quarterly, it's very strong. On monthly, of course, it's strong. Weekly is strong. And we don't have to go down further. We can see that how it is progressing. So that's why the bond yields are a point of concern for sure from a longer term point of view because it hasn't started going down. Okay. So that's why we are tracking this one as well. So let's see how next few weeks goes, right? And yeah, and sometimes what happens is the stock market and the crypto market expects that the yields will stop somewhere because they have some anticipation that yields will stop at, let's say, 4.8 or 5, and then if not, then 6. And so they have some tolerance inbuilt, but they have also some threshold which we don't know. If they realize, if the market, like big players, realize that this is unstoppable, then they'll start reducing, in my opinion. So we have to focus on BTC, of course, because we don't know what is their criteria. So let's say I'm a billionaire and I know 10 other billionaires who are ready to dump Bitcoin or, let's say, stocks when the yields are so and so, then I will have some idea. But we don't know that. So that's why we have to rely on the chart, because whatever they will do, it will be reflected on the chart and indirectly we will know. That's how we'll know, because nobody is going to tell us, right? But the chart will tell us, because whatever they do, we'll just copy in a way. So actually, TA, if you look at it, focuses on the output. When the fundamental analysis, when they do what is the difference? The key difference is they focus on the input and then try to see what is the output. In technical analysis, we don't focus on the input at all. We focus on the output only. So we say, okay, we don't bother what all inputs are important. We say, what is the real net outcome? And we focus on that. And we track only the outcomes, trend of the outputs, basically. Because all this closing price is nothing but output. These are not inputs. So the price is output. And the output is from the different input. So many input, global input, local input, so many input comes in, and then the output comes, which is the closing price. So we kind of do the shortcut in a way. We don't bother to factor 10 or hundreds of input. We just focus on the output, say what is the result. So let's say if you say, okay, if you eat this much, then your health will improve, let's say someone says. So focusing on the input. And what we do is we ask different question. Is your health improving? If answer is yes, that means you must be eating good or your habit must be good. That means you're doing something good, right? We don't care, but whatever you're doing, you continue. That's how TA thinks. So because this input are not in our hand, in traders' hand, but what traders figure out that whatever is happening is good for your health. So focus is on the health. And if we feel, in fact, doctors do the same. Doctors are not going to track what we are taking input in terms of doing exercise or not, or eating or not. But what doctor will say, okay, now you have this condition, and they ask us to visit again. They ask us to follow up. We go after a few months or a year, whatever, and they check again with reference to past data. And that's what they do. In fact, whatever doctor do, we do exactly. We are technical analysts are actually the doctors of price action, to be honest, because doctor do exactly the same thing. They ask us to test blood or sugar or whatever, blood pressure. They take all the data and they look at the data in terms of range. What is the range which is called healthy? If it is beyond the healthy, it's weakness. If it is whatever out of the range, then it's weakness. If it is in the range, then it is healthy. That's what they do. But the good thing is they know what to do. That's why they are charged. I mean, they charge, right? So they know what to measure, but it's not that they're inventing. So if, for an example, if they're measuring blood pressure, they're not inventing what is the healthy. It is kind of based on the past data record, and they're just following that range. That if your blood pressure is this much, that means normal. But only thing is, what they know is what to check, when to check, what to check, right? So, but essentially, what they're doing is they're checking the output, and TA does the same thing. TA checks the output. So the actually the doctors are technical analysts in a way, and it is the same thing. They look at the health data, and we look at the price data. That's the only difference. But they have to look at multiple health data. We just have to look at the price data. So I'm not trying to compare two professions. This profession where the data are very different, where the human data are predictable in a way. So if the blood pressure range this much is, let's say whatever is the number is the normal, but here in the price, it's what is normal also changes. So that's the challenge. So it's like one day doctor is visit some human visits the doctor. Next day, let's say an ape visits the doctor, and let's say next to next day a monkey visits the doctor. Now think about that. Now doctor cannot apply what was applied on human, and same thing. So imagine doctor is gets visitors, different animals are visited, and doctor have to change as per the animals. So that's the challenge in TA, I believe. So again, I'm not trying to say that this TA is difficult than doctor. That's not what I mean. But the point is there is no standard. Okay, so the good thing is we only focus on the price, but point is we cannot say this is the normal range or normal price. We always have to calculate what is normal. So anyway, I just I think so. Point was we compare the output, the fundamental analyst compare the input. I mean, assess the input and try to assess what might be the output. So that's the difference. So coming back to our main point, the 10-year is very bullish, and we would like to see weakness in this. DXY has already shown weakness, which is good thing. So that I consider as a positive sign. Okay, so I think let's look at the dominance chart as well quickly. The Bitcoin dominance is up, right? That means BTC is doing good, better than most of the coins. Simple, right? That means the focus is BTC, right? That means most of the BTC pair are going down. In simple words, because BTC is stronger, means denomination is stronger. That means the most of the BTC pair you would see going down. So this is simple thing. And where this is useful, Bitcoin dominance is where how much Bitcoin one could keep in the portfolio. So if the Bitcoin dominance is trending up, that means not financial advice, just a disclaimer. If the Bitcoin dominance is good, logically speaking, more Bitcoin in the portfolio makes sense. However, any coin is beating Bitcoin because this is one Bitcoin versus thousands of coins. So when the Bitcoin dominance goes up, it doesn't mean Bitcoin is beating each and every coin. If you want to know which coin is better than BTC, then you have to look at BTC chart, right? Let's say if RNDR BTC, if you look at, for an example, it would be outperforming BTC, for an example. Look at this. The RN, oh my bad, RNDR BTC. So if you look at it, so it's trending up, right? If you look at lows, right, it is making progress. That means the RNDR is beating BTC. So the BTC dominance is going up. This is important because some people misinterpret it because BTC dominance is not very accurate data because it is one versus thousands. So if you want to see which one is doing better than BTC, you have to see. I'm not saying analysis. This is like looking at the chart itself and simple. It is so simple. Like if you look at this one, what is happening, it's not, you don't have to calculate support and resistance. Look, just looking at the chart, it will tell you. If you want, you can do the line chart because that will give you more clarity. When you look at it, look at what is happening. Is it going up or down? The answer is it's going up for last few months. If we look at something else, for example, let's say Filecoin. Right? Look at this. What is happening? It is going down. You don't have to be TA for this one. So I hope you got this point that when you look at BTC dominance, if the BTC dominance is rising clearly, you don't have to be TA here, right? It is rising. So that means it is outperforming most of the coins, but you don't assume. If you are interested in any specific coin, I took two coin as sample and look at, so we look at it, R&D is doing much better than BTC. But when you look at FIL, it's not doing better than BTC. So you have the answer. So look at the BTC dominance chart to see if the BTC is doing better than the rest. If answer is yes, like in the present situation, then you have to look at individual coins with a BTC pair to see if that coin is outperforming. If it is outperforming BTC, that means that coin makes sense. Otherwise, BTC makes sense, right? And the situation could change. So for an example, Filecoin doesn't make sense in this example. But what if Filecoin starts pumping for a few days and for a few weeks and start trend? Then of course you can say, then now FIL also makes sense than BTC. So you have to be, if you're interested in deciding, then this is simple way I could share. Okay. So this is not financial advice by any means. This is logical, right? This is not even TA. This is simple logic. But I hope this will help you. So this is how I use Bitcoin dominance chart and BTC pair to understand which one makes sense, which one is stronger, because we would like to keep stronger. It's not that you change every day. That's why you would have to check at a weekly time frame and see, look at the trend, not just every week's movement, but overall direction, the slope like this. Right? So if this price goes down and starts downtrend like this, then you would see that most of the coins will also start getting better than BTC. You will see that. When you look at the BTC pair, you will see that when that happens. At this moment, BTC is dominating, right? So I hope this will help you understand. Okay, so I think with this session, the first part, um, we can conclude. If any question, feel free to ask me. We'll continue with the second one with swing coins.